Google released a blog or a report on the dangers of quantum computing and how it could come a lot sooner rather than later. They estimate a machine with roughly 500,000 physical qubits could crack the Bitcoin code or the Ethereum blockchain. Google itself has set 2029 as its own internal deadline to migrate its systems to post-quantum cryptography. In the case of Bitcoin or Ethereum, they would need to have a hard fork in order for it to move everyone's funds to a new quantum-resistant address. So it would be a massive, massive decision from the Bitcoin community and from the miners to do that.
If quantum computing is ever serious enough to jeopardize Bitcoin, I mean, think of the rest of the world.
Welcome back to another episode of Tapping into Crypto. We've got a bit of a different setting today as Pav is in the lovely Darwin. Pav, what are you doing up there, mate?
Mate, I'm just croc watching. Trying to get out there, not get eaten. It's going to be great. No, we're doing family holiday. It's good holidays. Got to get away. How about you, mate? How was your Easter?
Yeah, fantastic. Did a bit of time at the coast, did some barbecues with mates. So I went to the footy. The Lions got a big win over Collingwood. So can't complain.
No,
Great weather's been cracking in Brizzy. So yeah, mate, fantastic.
It's been good here too. But obviously not much is changing in the crypto space, but or is it?
Well, price-wise, yeah, there hasn't been too many major developments. We're a bit sick of talking about things happening in the Middle East, so we're not going to touch on that today, just because there hasn't really been much happening in regards to Bitcoin on the back of that. So, and the rest of the crypto market. So, we're going to cover some other interesting little points today. One thing that came out this week and has a few people spooked in the industry is Google released a blog or a report on the dangers of quantum computing and how they could come a lot sooner rather than later, and how they could impact blockchains like Bitcoin and Ethereum and pose a major risk to the whole supply of Bitcoin. So we're going to talk about that. We're going to talk about like how big of a threat this is, what's going to need to change, because yeah, like based on what their report says, it's certainly alerted me more so than I had been before about quantum computing.
Yeah, it's been a hot minute, but I think it's going to be good just to take what's said in that research paper, because I feel like the one thing about technology is I think every year for the last, let's say 6 or 7 years, like we've seen Bitcoin and quantum computing be like a talking topic, but it feels like every year there has been progression in the technology and everyone is quite concerned. I think more and more as the years move on. So I think it's going to be good just to clear up the air around that one. We're going to do top movers as always. But we also want to touch on there's some notable movements in the traditional asset management space that are actually now looking to offer spot Bitcoin and spot ETH to their customers. Now, this is huge because, we've talked about over the last, let's call it 2 years, how big of a deal regulation and legislation is going to be to the industry. This is like another good sign, I think, in a bear market that we're heading in the right direction. So keen to share with everyone what's happening there. But I think first we should dig into some top movers before we get too hot and heavy.
Absolutely. Well, Bitcoin is not a top mover this week. It's sort of hovering around that 68K US mark. I think it did tip over 70K, and then I don't know if it was on the back of this quantum computing news or just concerns around where the world's heading, and it's dropped back to around 68K. So nothing much to report there. But for the second week in a row, we've got Algorand in the top movers. It's up 44% in the last 7 days.
Yeah, it's nuts. And I think, it's quite timely we're doing the chat about quantum computing, because that could be a big reason why the asset's up quite a bit. Like you mentioned, 44% last 7 days at the time of recording. Today's Tuesday. Again, off the back of that Google Quantum AI team paper that was published at the end of March. Apparently, Algorand was cited 32 times, according to an article, basically highlighting how its digital signature and proof of stake consensus is not going to be affected by the impacts of quantum computing. So that's pretty big in a sense of, Google's coming out saying that an asset that is trying to be more present in the real world asset space, living on the current mainnet in Algorand currently, it is adaptive to quantum computing. I think that could be something the market's quite interested in right now, as we're seeing with price do what it does. Are you surprised to see Algo trend that high just off the back of that paper potentially?
Yeah, probably. Algorand's an interesting one. Like I remember I bought it way back way back when, before I actually knew a whole heap about it, just because I think I saw something about it online. And, back in the day, you used to buy things off the back of one random guy's opinion
Yep.
on YouTube. We've learned the hard way since then. But yeah, I mean, it's good to see that one of these legacy coins, one that's been around for a few cycles, is gaining traction and continuing to build and evolve. Particularly, in this space where quantum computing is becoming more of a threat. So yeah, getting stamped as quantum safe, obviously is a huge tick of approval from Google and does a lot for its credibility. So yeah, I think it's something that's doesn't give it a long term viability, but it's a good tick or move in the right direction for Algorand.
Yeah, and if we put a little bit of a, I don't know, bit of a sensible hat on this one as well, like the fact that it's up 44%, like, yeah, it's a lot, right? But at the same time, it's trading at currently 11, circa 11 US cents. Its peak in the 2021 bull market was $3. So again, like, it's still sold off so much, and you're going to require a fair bit of buying off the back of it from here, probably to see it even get close to those levels again. And again, we've talked about cryptos all about there needs to be technical reasons, there needs to be fundamental reasons why you purchase these things. Right now, it's hovering even under pricing from the 2020 bear market as well. So, there's still a fair bit to go in terms of price recovering itself. But yeah, it seems like the fundamentals in the news, the market is liking it. So I think from here, I'd wait to see if people actually keep holding it and price keeps going, or if the sellers start to step in. That's usually when you'd see the brakes come on and we could see it go lower.
Yeah.
Um,
I think elsewhere in top movers, we've seen a continuation of the AI narrative with the likes of Render, Near Protocol, and then Meme Core. I think that was in there last week as well. Bit
yeah,
of
still
a
going
Meme
strong.
Core launchpad.
Yeah, still going strong. And yeah, what else we got there? Some Morphos back in the fold as well. So we're talking about how they partner with Coinbase. The token itself didn't do too much in terms of governance, but there is some interest there from the lending side. But yeah, AI is definitely a recurrent theme there again, which is cool.
Yeah, and one thing I want to call out as well is Pyth Network. It's outside of the top 100, so not something we typically look at. But news came out this week that Polymarket, obviously one of the leaders in the prediction market space, has launched up and down markets for assets like Tesla, Nvidia, Apple,
Great.
Gold, etc. So what that means is essentially you can bet on, one of these assets going up or down in a certain time period. I'd say probably typically 24 hours. And they're actually using Pyth Network for the real-time price feeds. So Pyth is what's in the crypto land known as an Oracle network. People would likely know of Chainlink. That was like the OG in that space, which, scrapes different data sources to get real-time data. Python is a little bit different because it gets its data from first parties. So like it goes straight to the sources from like Jane Street, Binance, you name it. And they actually feed in their data directly as opposed to Python going out and scraping from different sources. So a little bit more reliable given it's coming from the parties themselves.
Yeah. So keep seeing more and more development from the poly market guys. I guess why not? They're doing so well. So that's interesting to see.
Let's move on to this quantum computing story
Yeah.
because it's sort of the theme of this week in particular. As I mentioned, Google put out a report earlier this week demonstrating how quantum computing is actually posing a far bigger risk than what we first thought, and it's going to happen sooner rather than later. So just to recap a few of the key points. So they estimate a machine with roughly 500,000 physical qubits could crack the Bitcoin code or the Ethereum blockchain. And to put that in today's perspective, so today's best quantum computers only have around a few thousand qubits. So still a way to go, but they're saying that the gap is closing quite rapidly. And a quantum computer could derive a private key from a public key in just 9 to 12 minutes. So essentially, Bitcoin settles blocks every 10 minutes. So if it can do that, if it can sort of crack this code and essentially convert a private or derive a private key from a public key with under 10 minutes, it's able to pose a massive threat to all the Bitcoin supply. And essentially, bad actors and attackers can use this to steal Bitcoin and, essentially attack the network. So Google itself has set 2029 as its own internal deadline to migrate its systems to post-quantum cryptography, and it's urged the crypto industry to do the same. So in the case of Bitcoin or Ethereum, they would need to have a hard fork in order to move everyone's funds to a new quantum resistant address. So I think it's like the 256 digit SHA they currently use is the cryptography method they use. The idea is they would have to upgrade that into something that's more resistant against these attacks. And that's massive because hard forks, particularly for networks as big as the Bitcoin network, it's not just something that you can do without a lot of consideration. And so it would be a massive, massive decision from the Bitcoin community and from the miners to do that. And it would essentially, there would be a legacy network and then a new network, similar to what happened with the Bitcoin Cash network. That was a hard fork, but that was, going back a long time.
Yeah, I guess the closest thing we've had in resemblance to this is when ETH went from proof of work to proof of stake. Like that was a hard fork. And it did, it goes to show that it is possible for these things to actually change direction and change their tech stack, if you want to call it that, to move into something else. But yeah, I mean, this is just another one of those Bitcoin is dead stories. I feel like that's kind of how I see it. I mean, I just want to stop and just be real about the whole picture, right? Like if quantum computing is ever serious enough to jeopardize Bitcoin, I mean, think of the rest of the world.
Yeah, exactly. I think with the difference is though, is that obviously like companies like Google are stating that they're looking to actively upgrade their services into post quantum cryptography is what they're saying.
Yeah.
Whereas they can do because they're led by a team of executives, to make those decisions. Whereas Bitcoin's decentralized, right?
No, it's based off consensus, right? So if everyone feels like that's a direction we need to move in, like I do feel like we'd get there. Like as hard as it would be, potentially, I still feel like blockchain tech is agile enough to make a shift like this. I think it's far enough away that yeah, maybe not. I don't know. I see the perspective that it's not that, like it's far enough away that could easily see blockchain pivot to a new hard fork if it had to, if that was like the way to go. And I think the key thing is like you look at something like, again, we talked about Algorand, like it's not unheard of a blockchain technology moving towards something that is quantum resistant. So it's like it wouldn't be novel, like it already exists. So there would be a pathway to get there if we had to.
That's just another Bitcoin is dead argument because we've heard heaps of those before and they've proven to be wrong several times. But when the likes of Google, which is probably, a top 3 tech company in the whole world and in the history of mankind, is coming out and saying that, like they would have dedicated teams to research things like these. And obviously if they're saying that crypto's most at risk, that's quite a concern. Like what would be, like, why would it be in their favor to lie about that? And essentially, like, because if crypto is at risk, and the Bitcoin network in particular is at risk, that could, ultimately be the catalyst for an economic downturn, right? Considering how much money is in crypto, it's one of the biggest assets in the world.
Well, it's still a drop in the ocean compared to the rest of the market, but yeah, like as much as Google's team of engineers, etc., like getting on it and going to this like post-quantum cryptography era, like I'd be more concerned still around just the general arc of everyone upgrading in the way that's safe and the right way to do things. Like I feel like blockchain would probably have more resources than, let's say, some niche software providers or things like that may not be using standardized tech stacks. They might be using bespoke tech stacks. They might try and build quantum resistant, but they don't end up doing it correctly. I still feel like there's more misadventure there. That's just my take.
Okay, well, it's one we'll definitely have to continue to monitor as things continue to develop.
Well, actually, I want to start off by saying I think so. I'm on the podcast. Like we kind of feel bad about it when we're writing notes for the show. I feel when we keep updating people on what's happening in the regulation and legislative sort of space for crypto. Now, the reality is, a market, it moves when there's more buyers, right? To the upside and also to the downside when there's more sellers, which obviously is what we're seeing most recently. But to attract more buyers, we need new money to come into the space, we need a whole bunch of more adoption. And we saw in 2024 the ETFs did that, right? Like the ETFs just sprung about a whole new group of buyers that just didn't exist in the past. So, what we have seen is since 2025, there's been 2 major steps, particularly in the US. that have opened the door for big banks like Charles Schwab to do what they're doing now, which is offer Bitcoin and Ethereum purchases directly off their platform. Um, through a group of its subsidiaries to offer their approximate $12 trillion of customer assets access to Bitcoin. Now, their CEO, Rick Wurster, cited that there had been a surge in client demand in their March 2026 research. So they're not talking about research from last year or the year before, which I think is quite a common theme. Everyone talks about survey data that's a little bit dated, particularly as crypto market, the sentiment's moved a lot since a year ago. So even in March 2026, their customers are still classifying Bitcoin as a matured mainstream asset. So this is huge, I think, at least, particularly as we are in a bear market. The only way to get out of a bear market is to get buyers. So to see a huge multi-trillion dollar organization that, basically their bread and butter is asset and wealth management, start to be able to offer Bitcoin and ETH, I think that's huge. Like we actually, again, are going to see a new buyer of spot Bitcoin, similar to the ETFs. And what you need to know is that spot Bitcoin buying and selling actually materially moves prices for a longer duration. It's what creates trends versus what we're seeing right now in the market, which is a whole just about bunch of chop, like just up, down, up, down, up, down. That's more characteristic of a speculative market, right? So we're going to see a group of buyers that are likely more investors come into the space. And this is when we talk about what, everyone says that term that an industry is maturing. Like this is what it looks like. You're basically getting a group of buyers that don't just go all in. They're buying little bits at a time over a long period of time, and selling vice versa. That's what's going to, help sort of create the new trajectory or the new bull market for the next time round. I mean, this is pretty big for me. I think it's as big as what we saw in the ETFs in 2024, because this is just one of the players currently in the asset management space. Like there's likely going to be more to come is how I would see this. So it's just opening the door for that next wave of capital. And I think that's huge.
Yeah, absolutely. I mean, we want to continue to see this stuff, right? Like more traditional finance and institutions adopting Bitcoin is only going to accelerate the rate at which we grow this industry.
Absolutely. But is there anything you're doing different, Ted, now that you've sort of seen this whole issue in the Middle East drag out? We're not really seeing any resolution. Not really too much has changed, I feel, since the last week or the week before. Like, do you see things differently?
No, not really. You do get a bit fatigued with seeing all of this play out. It just seems like more bad news after more bad news. So just for my own well-being, I like to, sometimes put the phone down, or not log on to Twitter to see just, another failed ceasefire and whatnot with these things. But in terms of crypto, nothing's changed. I think, we're still going to see more pain to come when it comes to Bitcoin and the rest of the market. My strategy around, buying up at lower prices hasn't changed. I've still got my trigger orders set for, the likes of 60, 55, 50K, even lower than that. And I won't be changing that. I do think I'm not very greedy yet. But in my case, it's always in crypto, you kind of got to do what, the opposite of what your mind is telling you or what the masses are doing. So oftentimes, when things are super boring or things are super dull and dark, they're good opportunities to pick up crypto when no one else is.
Yeah.
But I still think there's more pain to come, as I've said previously. So I'm still waiting around for that time.
Yeah,
What
nice.
about you, Pav?
Yeah, the same. I think now more than ever, with the weather being the way it is and being in the NT right now, my focus is just having a good time and just stepping away from the screens. So I'll be doing that. I think, yeah, I still agree. Like things probably need to get a little step worse before they get better. And if people are wondering what they should look at, we have a quarterly report coming out from SwiftX in the coming weeks. So make sure you keep a track of that one. I explicitly go over probably what my thesis is there. So it's mainly around the employment market breaking, which we're currently starting to see a little bit of a downtrend that's just not really lifting. When we talk about policymakers, really well, not all countries, but the US and Australia in particular have what's called like a dual mandate. So they need to control jobs and employment as well as inflation. So right now we're seeing inflation remain genuinely in check unless we see this oil crisis blow out further. But the bigger issue is, and they've said it themselves, is employment. They worry about jobs. So that's when they come in, we start to see stimulus. I think we just saw some form of stimulus occur in Australia over the weekend, as much as I'm trying to stay away from the phones, but they've announced interest-free loans for businesses that are struggling due to the gas prices right now. So, just goes to show you that policymakers are ready to step in, even if it creates more inflation. And I think it's after that we start to see the markets like crypto start to recover, and it could get quite gnarly to the downside if we do see something break. So, yeah, I think it's just a good time to step away and not be stressed that you're going to miss anything.
What's your take on the fact that, yes, like they inject more capital into the economy, because the whole economy is struggling, right? But you still haven't fixed the fuel issue, which is the core root of all these concerns right now, and potential, downturn in the market. Like, if you're not fixing the root cause of it, and you're just sort of band-aiding the whole issue with a stimulus package, like, is that going to fix things? Maybe, in a short-term period, or does it even fix things in general?
No, well, it puts a Band-Aid on it, right? But I think the only thing I could find out about, let's say they open the strait tomorrow, there's still a multi-month period before things get back to normal. And I was reading, I believe, some ex-specialist or transportation and logistics specialist from Marisec, like the logistics company. So, he was basically commenting that, they could change it tomorrow, but it still doesn't affect where we're going next. Like, and where we're going next is still a supply line issue, right? I think this is a key thing. No one's going to know what's going to happen for the next couple of months, but it's likely, again, things don't just go away tomorrow if they open the strait up. And I think that's the way to view risk right now. Like, it could just take more than just a little bit of time to get over this.
Yeah, agreed.
Yeah.
And we'll be here to update you every week.
Yeah, absolutely.
This might be a bit more of a regular occurrence, the old split screen, because, as I mentioned in previous episodes, I'll be moving down to Sydney from next week.
Yeah.
So yeah, you won't be seeing the regular sort of in-office or in-studio setup, but that's all right. Pav and I will make sure to give you guys an update every week. So yeah, looking forward to that.
Absolutely. Thanks, guys, for joining us this week. And yeah, we'll be back again and do it all again.